Good afternoon, everybody. It's just gone 5 o'clock, so we'll make a start. My name is Andrew Schaefer. I'm in the Johannesburg office of Trafalgar. Joining me tonight, I'd like to welcome my colleagues, Bernard Klein, who's our underwriting manager. We've got Sadia Harris, who's our claims manager, and our team in the back office, Karine Kutsia, Peter Menon. So welcome, colleagues, and thanks very much for joining tonight. This evening, we've got our final webinar for the year, our 10th in the series for 2025. And I'd like to thank everyone who's followed the series this year. We hope you find them useful, topical, and we do try and cover topics which are important and relevant for community scheme management. Just a reminder that all of our webinars are loaded on the training site, Trafalgar's training website, training.trafalgar.co.za. You'll find them there. We have a chatbot which has been trained on all of our courses, webinars, questions of the week, etc. So it's an easy way to ask technical questions and get fast answers. Karina's in the background if you want to link in with her for any other questions that arise. But, certainly all of that training content is free. We, are building it all the time, and we are all certainly, Peter, myself, Karine, available for any further questions that follow from that material. Tonight, our topic is insurance. And I think it's one that, causes a lot of anxiety and frustration in community schemes. And we're hoping tonight just to demystify, a number of topics which crop up, replacement value surveys, risk assessments, how does underwriting work, what to look for when quotes come through on the underwriting side, which Bernard will speak to start us off tonight, and then afterwards claims. And Sadia will talk to, how should a claim be lodged, what documentation is required to lodge a claim, how to advantage, the whole claim process to minimize the risk of a claim being repudiated, and what to do if a claim is repudiated, just so that we are in the know. So with respect to my colleagues, not many people like insurance, but that is until we need insurance. So, that's really what we would like to grapple with tonight. Please do pose any questions that crop up in the Q&A. We will try and answer that as we go. There will be some time for questions at the end, and I might pose questions to Bernard and Sadia at the end of their particular sections that they get to. There will be a short survey link posted in the Q&A or the chat. Is it in the chat, Karine? So if you have time and you'd like to give feedback on the webinar, please, we'd appreciate that, or it will be emailed with the recording link, which will be sent out to everyone who's registered. So no need to ask for those. We will circulate that via Karine or Siobhan tomorrow. So that'll be the case. We will go into recess now for the year end after this webinar. So December, January, we will be in recess for the holiday season, and we plan to resume a webinar series from 2026, February or March, and we'll try and cover additional topics, or maybe the same topics to a different degree of detail, and maybe some current material that relates to those. So please be in touch next year, and we'll continue to circulate the invitations, and we plan to continue at that point in time. Right, Bernard, if I could maybe hand over to you to cover the topic of underwriting, and we'll take it from there. Thank you very much.
I'm Bernard. I am an insurance specialist that has been serving the insurance market for close to 20 years. And I would like today to just clarify some key insurance-related matters, specifically to do with underwriting and how it affects your insurance experience. Today, we start off with the goal. What do we as brokers need to do? What's our objective? What our goal? Why are we here as insurance brokers? So we as insurance brokers, we are, as currently in TFS, we are insurance specialists in property, and our aim or goal is to make sure that you guys have the adequate insurance in place to protect you in times of need. By doing that, there's also some key objectives that we have to adhere to. We have to explain to you the insurance, exclusions, warranties, and potential pitfalls within insurance. We, as your broker, would negotiate on terms and conditions with insurance on your behalf. As brokers, we represent our clients who are known as insureds in the insurance market so that you don't need to do that. We use our expertise and experience to propose improvements to your benefit so that you can save cost and obviously strengthen your overall insurance portfolio. So the question is, obviously, you as money managing agents, you've got insurance policy in place. Next slide. You have a policy in place, and the question is, when do you really engage with your broker? Most people will say they only engage with brokers at claim states or at renewal states. However, an insurance broker needs to be engaged on many other times. For an example, when you have any concerns with regards to your insurance, or you need some type of guidance with regards to insurance-related matters, that would be one of the best times to approach your broker. Sometimes there is changed in a risk. For example, you've got a new gate, improvements to your risk. You need to make sure that your broker are informed so that they can make sure that the current insurance that you have in place is sufficient. Other times where you might need to engage with your broker is when your policy renew, which is called pre-renewal discussions and post-renewal discussions. It might be useful also to just call your broker every now and then just to follow up to make sure that your cover is indeed sufficient and adequate, considering that market changes and economical changes might affect your insurance portfolio. One other reason to call your broker is that if you feel that the premium that you've paid do not align with your risk exposure, meaning that you feel that you don't claim enough for the premium that you've paid, perhaps you can request of your insurance broker to approach the market to see if there is some better offering. Other times would be just for your broker to do a needs analysis or insurance reanalysis, just to make sure that everything is in place. So calling your broker or engaging with your broker should not just be when you have a claim or when you have a renewal, but it should also be if you feel kind of uncomfortable with regards to insurance-related matters, or there's something that you don't understand. This is where your insurance broker should be engaged with, or you should follow up with your broker to make sure that your best interest is protected. Next slide, sorry. The question that people always ask is, we've got an insurance policy, we pay premium, but what are we actually paying for? From a property perspective, we as TFS with our clients, we protect the property, the building. Now, there is some confusion with, so what is the building? The building that we insure is the outer building, but it also includes swimming pool, gates, fencing, whatever it's done within the property that forms part, fixtures and fittings would also be an example for parts of what is the property. Still done. So when we insure the building, like I said, we insure the building, boundary walls, gates, fixtures, fittings, swimming pools, and everything. So the example, the question, but still I don't understand, what is the building? If you've got a new property and you don't move in with all your personal assets, everything that you see in that you can sell, that is the property, and that is what we insure. What do we insure it against? Normally, buildings or property will be insured against natural elements. Example, flooding, fire, water damage, lightning, earthquakes, and so forth. What we also insure your building against is liability. Liability for for the owners, liability for trustees, and liability for employees. So what exactly is liability? This is when the property owners, trustees, or the employees can be held liable for loss, damage, death, or injury caused within the capacity whilst serving or in the building's capacity. I can give an example. If one of your friends do visit you and the gate malfunction and it causes damage to their car, they will hold either the unit owners or the body corporate liable for damages. If the wind blows and some of the tiles damage some of the other vehicles, they will hold you guys liable for that. So these are examples where the body corporate or unit owners can be liable for damages, and this is where your property policy will also defend or come into effect. One other cover that you guys are quite familiar with is geyser type of cover or geyser resultant water damage cover. So the building cover, liability cover, and geyser cover is normally 95% of all claims. However, your general property policy also extend to covers such as machinery breakdown, office content, and a few other extensions also. However, I would believe that the seminar would not be enough to just go into detail with those type of claims or covers. Now, next slide, please. One important thing that people always have to take into account is insurance valuations. Insurance valuations is a condition by CSOs that each and every property should do within 3 years, or at least once every 3 years. So the question to be asked is, so what's the purpose of valuations, and why should we do valuations, or what if valuations is not approved by trustees? First of all, one of the main purposes of a valuation is to make sure that the property that you insure is sufficiently insured, meaning that if your property is not sufficiently insured, you can either be underinsured or overinsured. What do I mean by that? If you've got a building that is valued at 10 million, but you do insure it for 5 million, and you experience what we call a total loss, insurance companies will only pay 5 million out, and you will be your own insurer for the difference, which is the other 5 million rand. To make sure that you don't fall within that pitfall, it is advisable to evaluate your property as per CSO's requirements every 3 years. So what do we do to help our clients have a better experience when it comes to valuations? We will remind all our clients before the 3-year expiry date that you need to do your valuation. We do have contractual agreements with reliable valuators where we will source you and present you competitive quotes. As mentioned, if trustees do not approve or do valuations within time, they will be non-compliant with regards to CSOs, and also they might find themselves either underinsured or overinsured. Overinsured meaning that the value is above what the real value is, meaning they pay additional premium. Sorry, next slide. One of the important things about insurance is renewals. So what exactly is renewals? So every 12 months, your policy will reach what we call an expiry date. This is when the insurance company will reassess your insurance policy, where you will have the time to speak to your broker, where we will make sure that the cover that you have is the right cover, the insurance conditions comply with, and that you are ready for the next cycle. This is normally when the value of properties will either be adjusted by inflation, or this is where conditions of previous conditions of the policies, such as warranties, exclusions, will be taken care of. This is just one day of the year where insurance company will take a magnifying glass and make sure that the risk and everything is good, or where you will have opportunity to obviously state your case, or we as your insurance broker will negotiate on your behalf. Our role as your broker at renewal stage would be to negotiate terms on your behalf and try to negotiate a better premium. Companies will look at what is the value of your building, what current exposures do they experience, what factors affect your building. They'll also look at if your building is deteriorating, what is the claims history of your building, and if you comply with with policy or insurance reasonings. We have to take into consideration that an insurance policy is a legal binding contract. It means that the policy should comply with standard legal compliance methods, meaning that at renewal state, an insurer will look at it and see that do you comply, and if not, they will have much reason to either increase or exclude some type of risks or increase premiums, like I said. The broker's role or our role is to make sure that you are protected, well informed, and we will negotiate on your behalf to make sure that you get a better offering. Next slide, sorry. Thing about insurance is that people will always ask, so we're paying premium and it goes up every year, but what can we do to counter this effect? How can we pay lesser premium, or how can we pay the premium that's worth for the risk exposure? As mentioned earlier, you can avoid over-insurance, meaning that if you make sure that your property is valued for the correct value, you will pay the right premium. But if you do not do a valuation and your value is over the normal insured value or what it should be, you will actually pay more premium. So make sure that your valuations is up to date. One other matter can be that if you as a insured claim for every small claim, like 5,000, 3,000, you can say, we will rather increase our excess or deductible to 10,000 Rand, and we will absorb each and every claim up to that limit so that we can pay a lower premium or lower insurance premium. That can also be an option, and that will also where you will mitigate and try to make sure that you guys can absorb those, not just absorb it, but manage those smaller claims. One other method would be to sit with your broker and do what we call analysis of your claims, where we, as your broker and yourself, can work together and see that if there's unnecessary claims that we could have prevented, or claims that it's just unnecessary, or we can look at the past data to prepare for future data just to have a better experience from an insurance perspective and also try to cut unnecessary claims. Other important method would be to maintain and to comply. One important thing that you guys should take is that to work closely with your broker, not just to engage with them at claim stage or renewal stage, but also to utilize the expertise within your brokering to make sure that you can effectively manage your risk or manage your property. Insurance is not just about paying out claims, but one fundamental aspect about insurance is having access to expertise about subject matter, which is insurance, to enable you to have a smoother insurance experience. So this is my part from the underwriting part, and I hope you've enjoyed my session.
Right. Hello, everyone. I'm Sadia Harris, the claims manager, and I'll be guiding you through the essential aspects of the claims process for community schemes. Our focus today is to ensure that you know how to manage a claim, what is covered, and crucially, what is not covered to minimize rejections. We'll begin with the role of the broker. First, let's quickly clarify the broker's role as it directly impacts your claims experience. We have two different types of brokers in this industry. The non-mandated broker, this is our position. We act in your best interest to secure your policy and then manage the claims process on your behalf. However, please remember that claims approvals and payments are entirely dedicated and handled by the insurer. The binder broker, however, has a little bit more authority. They can provide quotations and approve and pay claims on behalf of the insurer. Our commitment at TFS is to provide you with transparent, efficient, and professional service. This means we at TFS acknowledge a new claim and lodge all required documents with the insurer within 4 hours. Our aim is to respond to existing claims queries within 24 hours. Next slide. What is covered? Understanding coverage is the first step to avoiding disappointment. What constitutes as a valid claim? A valid claim must arise from a sudden and unforeseen event. This is specifically covered by your policy. These are often called defined events or perils. Examples of covered events include fire, storm, lightning, impact damage, and burst water pipes or geysers. What is not covered, and these are critical exclusions, is the most important part of these, as these are the main reasons for claims being rejected. Insurance is for the unforeseen disaster, not for the foreseeable expense of maintenance. Insurance policies generally do not cover losses arising from wear and tear or gradual deterioration. This includes the routine aging of natural breakdown of materials, such as rusted pipes or deteriorated waterproofing. Lack of maintenance, failure to conduct necessary preventive measures, upkeeping on common property like unclean gutters or ignored roof leaks is not covered. Non-compliant installations, damages that are linked to structures or systems that violate current building codes, such as geyser installations without the valid certificate of compliance, known as the COC. Late notification of losses, generally older than 30 days, can often pose a very large issue in overcoming with the insurers as to why claims should be entertained. Next slide. Lodging a claim and the time limits. When a loss occurs, swift action is crucial to comply with policy conditions. We often then need to look at how do we comply and how do we lodge a claim. The initial contact should be an email to your designated broker's claims email address. This email must include essential information, such as your policy number or your scheme's name or the body corporate or homeowners association's name. The full details of the incident is crucial for us. The insurer looks at the date, the time, the location, and the specific unit number. And they also require us to provide a clear description of how the loss or damage occurred. Photos of the damage are very helpful. Full contact details of the person reporting the claim or the person who will be responsible for the first amount payable once we get onto that section is very important for your broker to know. For geyser claims, clearly state if the geyser is within the 5-year warranty period or if the claim is for unforeseen damage. A photo of the serial number will help us trace any warranty. Time limits and late notification. Policies require notification of loss within a reasonable time frame. This speaks to the 30 days that we just mentioned earlier. The risk of late notification is that failure to promptly provide the insurers with the essential after repairs have been done can lead to the insurer invoking what they call the prejudice to insurer clause. Why? Because the insurer is prejudiced as they cannot inspect the original damage to validate the cause, which is a breach of the policy's conditions. The consequences for late reporting is a major reason for repudiation, which is what we as brokers try and avoid on your behalf. The documentation and the evidence. To prevent delays, you must provide complete documentation. This includes damage quotations or reports, which often speaks to an itemized billing quotation or invoice, which should include our claim number if possible. At that stage, your broker would have already provided you with the claim number. Photographic evidence is essential. Clear photos of the damage, the cause of the damage, if visible, and for geysers, photos of the old and new installation with the respective serial numbers. Compliance documentation is specifically important for insurance claims, especially geysers, which are the most common. The compliance documentation we refer to is the Certificate of Compliance. Next slide. Checking limits and excesses on your policy. Always review your scheme's policy schedule to understand your financial responsibilities. What we look at there is the sum insured or the limit of indemnity. This is the maximum amount the insurer will pay for a specific event or cover category. For example, you will often see on your policy schedules that the geyser replacement limit will have a certain rand value. Often, for the most common geyser replacement of 150 litre, we're looking at around about 15,000. These are determined by the insurance company. An excess is the first amount payable. This is the initial amount the insured, in this case the body corporate or specifically the owner, must pay for a claim. This amount can be a flat rate, like a 2,000 rand, or a percentage-based figure, often found under your resultant damage sections. Next slide. Repudiations, escalations, and resultant damages. What do we do if a claim is repudiated? If your claim is rejected, don't give up immediately. Get in touch with your broker should you feel that there is cause or mitigating factors that can influence the insurer's decision. The first step is always to start with your dedicated claims consultant, who ideally would have seen you through the claims process. If unresolved, escalate internally to the management teams. Myself and Keletso will obviously be dealing with you on that front. We then take it into the external appeals process with your help. You lodge a formal appeal directly with the insurer. For example, one of our partners, Standard Bank Insurance Limited, and we've just given you an example on the screen as to what the respective email address is. Important to note, however, is that this appeal must be logged within 90 days of receiving the rejection letter. If the claim is still rejected, you may lodge a complaint with the National Financial Ombuds Scheme. Details are available on their website. For legal action, this must be instituted within 6 months. I'm still on the previous slide. Thank you, Peter. Yeah, thank you. Sorry. For legal action, this must be instituted within 6 months after the 90-day internal appeal period has expired. We're now moving on to who covers the resultant damage. Thank you, Peter. There we go. This is a common issue for community schemes. The scenario we present to you is if an insurer rejects a unit owner's claim because of defective common property maintenance, example, a poorly maintained roof which causes water damage to the unit, the answer is that the liability for the resultant damages shifts entirely to the body corporate for resolution with the affected unit owner. The broker's role ends once the insurer has made a final decision. Our role in the claims file is complete. The matter becomes an internal dispute regarding maintenance accountability between the owner and the body corporate. We recommend that if the affected owners, that following an incident like this, the affected owner should formally write to the trustees to request coverage for the resultant damages, citing the insurer's findings of lack of maintenance on the common property. This concludes the claims portion of our webinar, and I'm sure we can now move on to the Q&A session. Thank you for your time.
All right, thank you very much indeed, Bernard and Sadia. Right, so maybe just to start with some common questions and challenges, I suppose. So first point, Bernard, is we spoke about maintenance being important to keep up at a body corporate or a homeowners association, so that the insurers aren't potentially going to repudiate a claim on the basis of lapsed maintenance. Can you just comment on what areas of maintenance are important to insurers? When that could be checked, talk about risk assessments. So where insurers are seeing high claims, they may send a risk assessor to the building. What does that risk assessor look like? And what is the outcome following a risk assessment that has been organized from an insurer side? So perhaps you could just talk about that, really just trying to emphasize the importance of continuous maintenance and evidence of that continuous maintenance, so that a body corporate is well prepared if there is a claim to demonstrate that a claim is not related to absent or defective maintenance over time.
Thank you, Andrew. That's a very excellent question. And obviously, I think that question do go over from underwriting to claims, but obviously from an underwriting perspective, I would think that let me just answer it from a technical point of view. First of all, we have to understand that insurance covers uncertain events and not certain events. If an event is certain, it's what we call in insurance uninsurable. It's what we call a waiver policy. Example, if I am certain that something will happen at a certain specific time, I can ask you the correct amount of the loss, what it would be, add another amount for my work, and I'll make a profit. Insurance doesn't work on that. Insurance work on risk. So the expectation from an insurance perspective, if you insure your property, insurance wants you to apply what we call due diligence, and you have to look after the risk as if it's uninsured. We did mention earlier that an insurance policy is a legal document. It means that you must comply with municipal regulations. And obviously, you have to keep, which is a policy condition, you have to keep your risk in good standing. In good standing means it must be maintained, it must be kept in a good condition. For when an insurance loss do occur, it's an accidental incident which an insurance company will take on. So every now and then, what insurance company will do, if they feel uncomfortable with a risk, they will send out what we call a risk engineer or a risk surveyor. This person will have the expertise from insurance-related claims and matters. They will go to your premises and they'll identify certain exposures within your risk. For example, I can give an example. If your electrical wiring is not in good standing, it will have exposure from a fire perspective. And the recommendation would be obviously to make sure that a qualified electrician is appointed as soon as possible, for which there will be a stipulated time period. And then a COC or a compliance certificate needed to be submitted to insurer to make sure that you do comply. So a risk surveyor, people will look at it from a negative point of view. Someone with laws and you have to make your buildings to such so nice and so. But in actual fact, a risk surveyor is somebody with the knowledge that comes to you, that identify potential exposures so that you can improve your risk, so that the opportunity of a loss, if it do occur, is either lesser or it doesn't occur. Remember, just to answer your question, also to underline, if there is no risk, there's nothing to be insured. If a risk is certain, it's uninsurable. There must be uncertainty, and there must be something that the insurer are willing to take on for it in exchange of a premium. I hope I've answered your question, Andrew.
Yeah, no, thanks very much. Bernard, just trying to speak in plain language and in practical terms, and, for the benefit of our audience, many of whom are trustees or directors, I would say, make sure that your replacement value surveys, which you did touch on, are up to date, that they are arranged every 3 years. The broker does assist with that. And the key benefit is that there's a qualified registered professional that inspects the common property in particular for adequate insurance. So they will go around the building. They often identify, maintenance issues that need to be attended to, which are reported on, but they will check for fixtures and additions that need to be specified in the policy. They also give a view on the market-related replacement value to match to the policy schedule. So the point is that, it's a very important way of double checking the insurance cover, the limits of the insurance cover, and actually very often it does demonstrate over-insurance, because what can happen is year on year the replacement values are just increased by 10%, which has been, a standard practice for a very long time, and that can compound to being well above market-related norms. And I suppose that 3-yearly replacement value survey, once again conducted by a registered professional replacement valuer, is a way of checking, rebasing, and making sure that insurance cover is accurate, correct, and cost effective. So that's point one. I would strongly recommend, trustees and directors or executive managing agents, that policy schedule, which Sadia talked about, is an all-important summary, of the insurance cover in place. It's fairly clear. It lists the cover categories, the values of cover, as well as the excesses that are applicable to each particular risk. So it's a nice simple summary of the overall policy, which can be quite scary and many T's and C's in the policy wording, but the policy schedule does give a very good summary, and it's very important to be aware of that, to have that documentation at your fingertips, and therefore to be aware of that. As Bernard was saying, the renewal milestone at the annual renewal of a policy is a very important milestone to double check on the adequacy of cover, but in particular in the cost effectiveness of the cover. So I think the only real way to know whether cover is cost effective is to ask for competitive quotes. And as a brokerage, we are very willing and certainly do as standard practice, obtain 3 or 4, even more quotes to try and make sure that we can guess the best options in the marketplace, and trying to make sure that we get the best balance of, cover fit for the building's requirements, to the best possible cost available. It must be said, and Bernard, to ask you to comment on the statement, the insurers are looking for the claims ratio to be less than 60%. So that means the value of claims should not exceed 60% of the annual premium. Where does the difference go? The 40% that they are hoping to keep, obviously it's profit, but there is a fair amount of administration cost that goes into maintaining a policy in terms of the claim support, the risk assessments we spoke about, queries, et cetera, et cetera. So as soon as claims start getting above the 60% claims ratio threshold, we will start seeing the insurers becoming anxious and really starting to significantly increase the premiums well above inflationary norms. And that is a signal that the claims experiences are too high. It might be because of maintenance issues. It could be of a particular design issue. And it's really a signal if the insurers are coming back with premium increases over 10%, for example, that something should be investigated to see if the risk and the claims can be better managed ahead. And certainly, unfortunately, we have many clients that think that it's an objective to claim as much as possible to the full value of the premiums paid. But unfortunately, that mindset does lead to the building's premiums significantly increasing for the reasons I've said. And it can even get to the point where the insurer gives notice to cancel the policy because they are not prepared to cover the risk under those circumstances of increasing claims beyond reasonable expectations. And Bernard, just before I come back to you as well, I think it is also important to recognize that the whole insurance sector has been through a very significant upheaval in the last 2 years. And the reasons for that is that the global reinsurers, which many of the local insurance companies must work with, have significantly increased their rates because of global catastrophes, many of the regional wars that you're aware of. And so, there's been this phenomena of significantly increased reinsurance, which has put a lot of pricing pressure on the local market. And many of the local insurance companies have substantially increased their premiums because they are paying much more reinsurance as well. That's also made many of the local insurance companies, significantly reduce their cover limits. For example, some of them will not place cover for buildings with replacement values over 250 million, because that then takes them into a different reinsurance category for which they don't have appetite to do. And that's led to cancellation of policies and certainly stress on clients where at short notice alternative cover has had to be found. So Bernard, do you want to just comment on those points, which I think are relevant to underwriting and certainly has been a reason why there's been large increases in premiums for lots of buildings, large numbers of cancellations of policies, difficulties finding cover for certain types of buildings. For example, inner cities are becoming more difficult to cover. Certain areas like the north coast of Natal, which has been battered by storm damage and sea and tidal damage, those are becoming difficult to cover. And, because of climate change that we're seeing and abnormal weather events, the insurers are obviously on high alert for areas that are seeing repeated patterns. And they actually do closely track, where the storms are happening, where there are clusters of storm damage, and they do actually risk rate buildings and their premium increases based on these, let's call it geographical events or geographical distributions of weather and weather-related risks. Bernard, so over to you.
Thank you, Andrew. Brilliant questions from your side. I just want to emphasize how insurance company works, considering the fact that more than half of my time in the insurance market was from an insurer perspective. Normally with property insurance, this is a non-motor, insurance companies feel very uncomfortable if a loss ratio is above 60%, between 55 and 60%. So what is your loss ratio? Loss ratio is the amount of premium you pay over a period of time, normally 3 years, over the claims that you've paid. So if your claims are 50,000 and the premium you've paid is 100,000, your loss ratio will be 50%. And if it goes over to 55 to 60%, insurance companies feel uncomfortable with that number. Why? So insurance company have what we call a model that they work from. So they work the model from 100 Rand, let's use it 100 Rand or 1,000 Rand perspective. So for each and every 1,000 Rand that I receive in premium, they would normally allocate between 50 Rand or 100 Rand, that's about 10% of the premium, to make sure that they have sufficient reinsurance in place. What is reinsurance? This is when the insurance company makes sure that they are protected in case something extraordinary happened and they found themselves wanting. I can give an example. One insurance company can insure 1,000 houses or 1,000 buildings near the coast. We have got one big flood and each building suffer 100,000 Rand damage. That's if you take 100,000 plus the 1,000 that suffered, that can be huge for insurance company. They need to protect themselves against that. That's why they take reinsurance out. We can look at Johannesburg. There can be a rush hour with 10,000 vehicles stuck in traffic and we've got a hailstorm. 50% of these vehicles can be insured with one insurer and they'll have a massive loss. They need to protect themselves. So insurance company take 10% of whatever premium they get to make sure that they've got the proper reinsurance in place. So just in case they found themselves wanting, so they also need protection. Then insurance companies also need to pay what we call acquisition cost. They deal with brokers, they deal with other intermediaries, and for the business they receive, they have to give something in return. That number can be up to 20%. So that means that for every 1,000 Rand, sometimes they have to give up to 200 Rand to brokers for acquisition costs. Then we have to look at admin cost and salaries and so forth. Up to 10% of the premium are paid to run the business, pay the salaries. That's another 10%. If we add up, we already get to 40%. 40% meaning around about 400 Rand. There's also another 3 to 5% that the insurance company put away for what we call profits or what we call project and so forth. So we can quite understand that the model that insurance use, that if an account runs at around about 80% or 80% of the premium results into claims, that insurance company, what they say, they actually pay for to look after an account. They don't really get out of the account because the model do not accommodate that. So yeah, Andrew, that is why insurance companies are feeling very uncomfortable when it's around about 65%, 70%, because they have to give out a little bit more to keep that account on risk. So, so if we talk about insurance, specifically insurance is not, it might be local in South Africa, but we are actually international organization, meaning that normally our local insurance companies will make use of reinsurers that are internationally. I can give examples like Swiss Re, Munich Re, and so forth. And mostly a lot of insurance company will use the same reinsurers to protect them for those big losses that I've just explained. Reinsurance normally have very big losses, and when they have big losses, they will resist and they will ask for higher premiums from insurance companies. The only way insurance companies can absorb those big increases is to ask the clients or the insured to absorb that. So that is why when one insurer at times increase their rates and premiums for specific risk, an example, risks maybe on KZN where there was a lot of floods, maybe 2022 and 2024, when the premium for storm damage or the premium for those type of exposures increase because reinsurers put a lot of pressure on it, insurance company will put that pressure back on the insured or the clients. And this is where there is phenomena within the insurance market where there is premiums that just go up. In insurance, we call it soft market or hard market. Hard market is where insurance do a cleanup and they will adjust the premiums to make sure that the exposure or the claims are in line with the insurance.
Thank you, Bernard.
Oh, sorry. If I've answered the question.
That's great. Thank you. Right, we're going to come to Sadia now. Just Sadia, I'm going to ask you about geyser claims, because geyser claims and properties typically make up about 50% of the volume. It is the big ticket item, and it's challenging for owners because the geysers are in the ceiling. They don't easily see the serial numbers and the stickers on the geysers. Most of us don't know what the compliance elements of a geyser installation are. So how does an owner, number one, make sure or know whether the geyser is covered by a warranty, whether it's 5 years or 8 years? How would they know whether the plumber has installed it in a compliant way, and to ask for a compliance certificate? And, how can a broker help with filling those, gaps or requirements, which you mentioned go with the claim process?
Thank you, Andrew. Wonderful question, very involved, even though it is just for the topic of geysers. I think one needs to break this into different segments. Often when a geyser bursts or when there is damage to a geyser, the first point of contact, besides being the insurance broker and notifying the insurers themselves, is the service provider. So the service provider arrives on the scene, and reputable service providers, specifically appointed through the insurers or by the insurers by facilitation of the broker, will be able to determine whether, firstly, the geyser is under warranty or not. The service provider will be able to look at those stickers or indications on the geyser itself as to how long ago the geyser was installed. Was it 5 years ago or was it only 3 years ago, which would then speak to a warranty issue. Similar to when your motor vehicle has an issue and you just bought it brand new off the showroom, the first place you're going to go to is back to the dealership. And that is how we view the warranty process as well, to go back to the manufacturer. How the role of the broker and how it impacts the geyser claims process and identifying this warranty issues is brokers, non-mandated brokers specifically rely on the expertise of the insurers. The insurers appoint contractors who are reputable, who are able to issue those certificates of compliance because they have been through the National Plumbing Organization's board and they've been approved. They are qualified plumbers who meet the regulatory requirements within their specific sectors. And I hope that answers the question with regards to how we obtain the COCs. COCs are generally just offered by reputable plumbers who are on the board, who are paying for the fee to be able to generate that compliance certificate, which then speaks to the guarantee of their workmanship and speaks to that they adhere to in honor that they have installed a compliant geyser, not specifically a refurbished geyser, which obviously would not look to be covered in terms of an insured event should the geyser burst. I hope that answers the question.
Yeah, thank you. Maybe just two practical points. The one is that, is that compliance certificate in the return to the broker and the insurance company in terms of where it's recorded, because it may not well be given to the owner of the property. Is that right?
Quite correct, yes. If the plumber was appointed by the insurer or through the broker, either which way it will be held on file. So should something happen to the geyser within 5 years, we are quite able, also in cohesion with the insurers, to determine if this is a warranty issue or not.
And maybe just to mention that, if the insurance appointed plumber arrives on site and they find the geyser is still under warranty based on checking the serial number, perhaps the call center of the geyser manufacturer, they would actually leave site and the geyser manufacturer would need to send a team to come and replace the geyser under warranty. So that can sometimes cause a delay in terms of the response because the repair is handed over from one appointed service provider who has arrived on site to identify that it's still under warranty, and then waiting for an alternative service provider from the manufacturer to come and replace under warranty.
Absolutely, two totally different entities. The service provider appointed by the insurance company will obviously only respond to sudden and unforeseen events, Andrew. That is the burst geyser, not the element that has gone during the 5-year period. Nothing else that has been damaged, the thermostat, and anything wide of bursting and overflowing of water tanks and apparatus. So it's the handover to the warranty service provider that is held independently from insurances or from the insurance claims process specifically as well.
Mm-hmm. And then obviously that repair would not be a claim. It wouldn't be part of the claim ratio. It's purely covered by virtue of the guarantee. While you raised the topic of thermostats and elements, are those covered by typical insurance?
Look, from the underwriting side, and I think Bernard would confirm that insurers, since evaluating specifically the geyser portion, most insurers have offered an extension, which is called the geyser maintenance extension, which then can be activated to cover elements that have blown or that have ceased to work, or certain components of the geyser that would not be covered generally under the insurance portion for bursting and overflowing. This is an extension offered under the risk policy, which we urge you to look into as well. I think Bernard can speak to the pricing or just the benefits of the extension. I hope I'm not throwing anything your way, but I do know that you're a specialist and would easily be able to answer that.
Yeah.
From an underwriting, yeah.
I think for now we'll just say it depends on the policy, and it can be
Absolutely.
It can be additional cover, and if it's obviously cheaper to replace an element or a thermostat than a whole geyser, so it would be something that the plumber would look at. Can you just comment on emergencies? So obviously geysers burst at any time, often at night, often in winter, and just confirm it would be perfectly acceptable for an owner to, as an emergency, arrange for their own plumber to come and replace the geyser, to really just, limit the losses, because they would want to stop water leaking, stop the water damages resulting from that, and just get the geyser replaced so they can restore hot water, and then report the claim and deal with the paperwork after the fact. So maybe you could just talk to that for a moment.
Any insurance cover or policy contract that you enter into expects that should a loss occur, that the insured would then act as prudently uninsured. So which means, should this happen at a time where you cannot think of your first point of contact being the broker or the insurer, or after hours in case of emergencies, and should your broker or insurer not, or should you not have the information on hand, the insurer expects you to act as prudently uninsured. It is completely acceptable, Andrew and audience, for a client to contact a reputable plumber, have the geyser replaced, keep the invoice, detailed itemized invoice, along with the photos of the burst geyser, which the plumber will take for you, and the serial numbers of the old and new geyser, which the plumber will have on record, as well as the compliance certificate, and then submit that through as a reimbursement claim, as opposed to taking it through the entire claims process for response. It is imperative that your broker or the insurer receives all the documentation that is required to swiftly just facilitate that refund or reimbursement. The reimbursement will still naturally be less any policy excesses or deductibles that have been applied.
And very often that excess needs to be paid directly to the plumber, as they arrive, so that they know that's been covered, and then the claim process will reimburse or pay the plumber direct, unless the owner is paid on their side. All right. Can you maybe just talk about, I think many people don't realize that the broker actually does try and fight repudiations. And you did mention it, but, most brokers would have a senior claims consultant, often a manager as well, who will closely interrogate each and every repudiation, looking for reasons to escalate with the insurer. So, you can maybe just talk to the way that the repudiation is thoroughly checked, a high propensity to escalate if there are good grounds to escalate, perhaps collecting more documentation. And, if that fails, subject to the criteria you mentioned, how does the ombud work? So, what is required to lodge a claim, or lodge a dispute with the short-term insurance ombud? How does it work? What are the timelines? And how often does it happen from your experience?
Okay. Yeah, so this is part of my daily job, specifically at this brokerage. How it works is, before a claim is repudiated, the broker would have received notification from the insurer that the claim is to be discussed within an internal committee at the insurer. That is how we know it's the alert signs go on, the alarm bells go on. So we proactively then look at the claim that was submitted and validate internally what could be the reasons that this file was presented through to the committee at the insurer's offices. We then look at the evidence provided, photos, or any damage reports, and we look for wording, or we look at the pictures to determine if there's any rotting or any aspects that are generally excluded in terms of the policy wording. We then receive the rejection letter. However, should we have seen something or found any mitigating circumstances through engagement with the client during that process, we would have then already presented it to the insurer to say, stop your process internally. We have found an additional source of information, or this is our view in terms of the policy response or the intention of how the policy was written in order to respond to it. We then go through an internal argument with management at insurers, often with management at a brokerage, and we either come to a conclusion to honor the claim, or we will allow the repudiation process to go through. Should the broker allow the repudiation process to go through, it doesn't mean that we didn't fight for you. What it simply means is that we require certain documentation should there be reason to overturn a repudiation, and we send out the repudiation letter to the clients. Hopefully, and in most instances, clients come back to say, yeah, but we didn't consider this, or we didn't provide this certain type of information, and we are then able to go back through to the insurer within a 90-day period to ask them to relook at the claim and to evaluate the new evidence or the alternative reports that have been provided by the client in refute of the repudiation. Should that process fail between the insurer, the broker, the client, the internal and external appeals process, naturally, should the client still feel that there is cause to go to the Ombudsman, a submission is then made through to the Ombudsman's offices. That has to happen within 6 months of the claim being repudiated. The Ombudsman will then call for the file from both the broker and the insurer and make an informed decision through viewing of what actually happened and what transpired. The Ombudsman will also speak to both parties and conduct an investigation and a view as to why the broker supported the client going through to the Ombudsman, what efforts the broker took to sway the insurer's thinking, what type of documentation was presented, and a conclusion or a resolution will be formed from that point.
Excellent. All right, so it's just gone 6 o'clock, so we are out of time. Many thanks to my colleagues for presenting and arranging. You'll see contact details on screen. You're more than welcome to contact any of us if you have any questions now or that crop up later. But thanks very much again for joining us this evening. I hope you found the topic informative. It's certainly an important one. Certainly for sectional title buildings, there is a legal requirement for insurance cover to be in place. And we have talked about a number of the important topics and common challenges that arise in insurance. So it just remains for me to wish you all a very happy festive season and take care on the roads. And we look forward to convening our webinars next year, likely in February. And thanks once again. Hope you have a good evening. Good night.